Today on the Roxom Report London, analysts say Bitcoin could be primed for a huge surge. Hacks have led to a $2.1 billion in theft in just the first half of 2025. We'll take a look at Hong Kong's recent push for regulation. The UAE invested $100 million into Trump's World Liberty Financial. All of that, plus Kraken is taking on PayPal, and Starmer's in hot water over his welfare bill. And we'll be joined by Susie Violet Ward, the CEO of Bitcoin Policy UK. This is the Roxom Report London. Something is very weird. Oh, yeah.
You're on.
Good afternoon and welcome to the Roxom Report, coming to you live from London to give you our takes on the latest and greatest Bitcoin news. Today I'm joined again by the lovely Susie Violet Ward of Bitcoin Policy UK. Susie, how are you today?
Very well, thank you. Thank you for having me again.
I love it. I can have you every single day of the week if you only had the time. All right, well, we're going to get straight into the top of the block story today. So yeah, this is top of the block.
Okay.
All right, we're on the stinger.
Sorry, guys.
That was quicker than we thought.
Well, because we were just going to get straight. I should have told you, and I've been very.
We're on.
Oh. Okay, welcome back. Let's get started with the biggest Bitcoin story making waves today. So, I'm getting there. Felipe Lafont, founder of the hedge fund Coatue Management, says he believes Bitcoin's market value could hit $5 trillion by 2030. That would put it in the same league as tech giants like Nvidia and Microsoft. Right now, Bitcoin is trading at around 107,000, close to its all-time high of 112,000, up nearly 50% since April. The jump follows the growing interest from investors, traders, and US President Donald Trump, who recently made what he called a massive prediction for crypto markets. Lafont, speaking to CNBC, admitted he's been slow to get into Bitcoin, even though it's now one of the top picks on his so-called Fantastic 40 list, a collection of investments he believes will lead the market over the next 5 years. The list includes Microsoft, Nvidia, Amazon, Meta, and Bitcoin in the top 5, notably leaving out Apple and Google. Lafont says he used to be worried about Bitcoin's extreme price swings, calling it double or triple the volatility of the Nasdaq. But now he believes that volatility is calming down. That's part of why he's changed his mind. He also pointed to a broader trend he called de-dollarization, the idea that the US dollar is slowly losing its dominant role in the global economy. According to Lafont, that shift could push more investors towards assets like gold and Bitcoin. Gold currently has a market cap of around $22 trillion, which Lafont sees as a benchmark for where Bitcoin could go. He hasn't bought Bitcoin yet, but says the upside is too big to ignore. If his prediction is right, Bitcoin could more than double in value and stand alongside the world's most powerful tech companies by the end of the decade. Wow. Coming over to Susie. What do you make of this prediction?
If legacy thinkers in the space are starting to acknowledge Bitcoin, then that's a really good signal
Yeah.
for Bitcoin. But he's making predictions, and I don't think he's really understanding the tech or the fact that it's a revolution. And I'm not sure how useful it is, but he's absolutely right. It will absolutely be all of those tech stocks easily by 2030, in my opinion.
Tell me a bit more about sort of, so you think that he doesn't quite understand it. Tell me what you mean by he doesn't quite understand the tech.
Well, he said that he's making predictions and he's saying he hasn't bought it.
Right. I was wanted to ask you about that too.
So if you understand Bitcoin, then you would be holding it. No one who understands Bitcoin doesn't think it's a brilliant idea, which makes me think that he doesn't really get it. Why make predictions, these huge predictions, if you're not actually going to have some skin in the game?
That's exactly what I thought when I read this, that line at the end. Hasn't bought it yet. So wait,
Why?
where is all this coming from? Then you make a really good point.
Yeah, it doesn't make sense to me. So it just makes me think he doesn't really understand it.
Yeah.
But he's right. Everything will bleed into Bitcoin. I think it will become huge in terms, and it will rival these stocks. I mean, 5 trillion market cap is not a stretch by 2030 at all.
Do you know roughly what the market cap is right now?
2 trillion.
Okay. Well, yeah, that's not.
Not a problem, yeah.
Interesting.
And everything's going to bleed into Bitcoin. I mean, when people start to understand this asset, and they will, property, stocks, shares, any hard asset that people put money into now, they're going to start coming out of those and going into Bitcoin because it's the best performing asset of the decade and it's the one that makes the most sense.
What do you think for property in comparison to Bitcoin? Because, people will always need somewhere to live.
They do. I think that it's not. This is my opinion.
Yeah, which I love.
Okay. I don't think it's worth owning property anymore. I think,
Everywhere?
yeah, I just don't think it's worth it at all. I think that it's a lot more beneficial to be holding Bitcoin and to be renting. I think that property is a noose around people's necks. I think it's very expensive. The gains have gone. And I don't think that really people understand that the value of housing hasn't gone up. It's just the purchasing power of your money has gone down. So the value of your house hasn't improved or increased. And I think because now people look at it and they just think that, oh, it's doubled in value, it's a really good investment. But it was a very, very short period of time. And although it may go up, Bitcoin is definitely set to be better. And it's easily divisible. You can send it to anybody quickly. Say if you needed to release some capital from your house, it wouldn't be so easy, but you can sell a fraction of a Bitcoin, you can send it to someone, it's highly divisible. It just makes more sense.
I agree with you in some degree. I think that buying, especially in London, is a complete waste of time. The price of it is so insane. But there are markets and places where it is a bit more affordable for certain people. You might not be in the most desirable of locations. And my concern with everybody renting, it's like, well, then who is owning the property? And then what happens when things get more crowded and you've got no control over prices going up with rents? And if, say, everybody's invested in Bitcoin and that goes up, I don't know, you're just there's no control. I feel like crippling yourself financially just for the sake of owning a home is not a smart idea. But having your stake in the ground with something that is affordable that you can buy, I feel strongly about that, just having that. But whether that's right or wrong is another.
No, I understand. And I had exactly that same feeling. And I can understand why you would feel that. And we've almost been programmed.
Definitely in the UK, it's like the dream.
Exactly.
But yeah.
If your property is expensive to run, to own, to maintain, you can't release anything from it easily. It's not rising at the same. It's not rising as quickly as Bitcoin. Yet you have all these liabilities attached to it. Maybe we have to start rethinking how we feel about property.
Absolutely. I mean, I listen to a lot of financial advisors that, because we have been brainwashed into buying is better. We've been told that forever. But the profits, you think, I bought the house for 100,000, I sold it for 200,000, I made 100,000. That's incorrect. You paid X amount in interest, a huge amount in interest. You had closing costs, you had maintenance costs. So everybody just looks at that. I made this much, and that isn't really how it works. And so. We were having to look at buying versus renting in London. And I did a lot of calculators. And it's like you take that money that you would have put down and you invest it instead. Like sometimes you actually can come out on top renting, especially in places like London. If there was
Especially with Bitcoin.
Yeah.
Because it's mathematically programmed to go up. We know that everything is eventually going to go into it. A lot of people will start realizing that it doesn't make sense to own property. You can't, and also there's still risk attached to owning a property. So for example, say if you had been in the war in Ukraine and you suddenly had to leave your home and then your home got bombed. That's everything that you've worked for and it's just gone.
Yeah.
But with Bitcoin, you can take it with you with a seed phrase in your head. No one needs to know that it's there. It's easily portable and it's just, in my opinion, a lot stronger and a lot safer.
Great topics to think about there, because it really does. It upends. This is kind of would be suitable for our Buck the System segment, because it's really just turning the traditional thinking on its head.
Yeah, but that's what Bitcoin does. It helps
Yeah.
you see the system for what it is, and it helps you reevaluate how you see it
Yeah.
and how you act accordingly.
Yeah, I love it. All right, we'll be right back after a quick break with the Market Watch.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Let's take a look at how Bitcoin has been moving over the past 24 hours. So Bitcoin's price fluctuated between a low of about 106,545 and a high near 107,646, closing at around 107.52, with a slight gain of approximately 0.07%, $70 on the day. Trading volume remained robust at roughly 44 billion, indicating active market engagement. In terms of inflows and outflows, while specific flow data for the last 24 hours is not detailed, recent trends show steady institutional interest, with spot Bitcoin ETFs experiencing consecutive days of net inflows, reflecting ongoing demand from institutional investors. The price stability and modest gains come amid a backdrop of significant global regulatory developments. Notably, US Senate Backing Committee Chairman Tim Scott announced plans to finalize crypto market structure legislation by September 30th, 2025, which has introduced some cautious sentiment in the market. This regulatory clarity effort, along with Backed Holdings' recent $1 billion SEC shelf offering aimed at investing in digital assets, including Bitcoin, suggests institutional players are positioning strategically ahead of regulatory outcomes. Additionally, Bitcoin's recent rebound from sub $99,000 earlier this month and current testing of resistance near 108,000 indicates technical bullish momentum, although the market remains watchful for potential retractments if resistance holds. In summary, Bitcoin's price in the last 24 hours has been relatively stable with modest gains, supported by strong trading volumes and institutional inflows, while market participants remain attentive to upcoming regulatory developments in the US that could impact broader crypto market dynamics. Susie, I want to get your take on this. We're kind of seeing things over the last few weeks have felt quite steady. I've noticed. What do you think?
I don't think it's really over the past few weeks. I think Bitcoin's volatility is dropping and it's less volatile generally than a tech stock. And actually, this is probably what we're going to see from now on.
Yeah. Which I think is helpful in terms of adoption. I think that's been what's made people nervous.
Exactly.
Yeah.
That's always the go-to that people say. They always cite Bitcoin's volatility, but there's definitely much worse out there, especially now.
Yeah. I want to get your take on when to buy in, because I know that sometimes with the volatility, people are like, oh, I'll buy in the next big drop, and then that drop doesn't happen, and then it shoots up, and then so you're kind of constantly in this. Do you have recommendations, dollar cost averaging, wait for the drop, just buy whenever you have the money? Like, what do you kind of think?
So everyone says buy the dip, and then it dips, and it's like buy the dip, and then it dips more. And it's like, have you bought the dip? It's like, I ran out of money.
What is the dip?
Ran out of money at the 2-3 dips ago. So I think that no one knows.
Exactly.
And you can never tell. And I was saying to Walton yesterday, he said that I can't remember how he described it, but he basically suggested that TA doesn't necessarily work, and I don't think we can predict these things.
Sorry, TA?
A technical analysis, so knowing whether it's going to go up or down.
Right.
Some people believe in it, some people don't. You just never know. Sometimes it's right, sometimes it isn't. So the safest thing would be to, as you say, dollar cost average, just keep buying at every single price, get every single price, and it will just smooth out. It's the best thing that you can do.
Yeah. Good advice. Thank you. All right, now and next it's time for your daily breakdown of the headlines driving the world of finance, tech, and digital assets. We cut through the noise to bring you what matters. This is the Global Gist. Welcome to the Global Gist. Here's what's making news today. First up, okie dokes. The first half of 2025 has set a new troubling record for crypto theft, with more than $2.1 billion stolen in just 6 months. That figure comes from a new report by blockchain intelligence firm TRM Labs. The majority of those losses, over 80%, were the result of infrastructure attacks. These are technical hacks that target the systems running behind the scenes of crypto platforms. In some cases, attackers gained access to a user's private key or seed phrase, which are the passcodes that control crypto wallets. In others, hackers exploited front-end systems, the part of the website or app users interact with, to trick them into handing over funds. According to TRM Labs, these infrastructure hacks are especially damaging. On average, each one made off with 10 times more money than the other types of attacks. The report also highlights protocol exploits, which made up about 12% of total losses. These attacks target weaknesses in a platform's smart contracts, the code that runs on blockchains. Flash loan attacks and re-entrancy bugs were 2 examples cited. The biggest hit this year was a $1.5 billion hack of the Dubai-based exchange Bybit, which TRM Labs linked to North Korea. That one attack accounted for nearly 70% of total losses so far this year and pushed the average hack size to nearly $30 million, double what it was at this time last year. The Israeli-linked group, Predatory Sparrow, also made headlines in June when it hacked Iran's largest exchange, Novatex, for $100 million. TRM Labs says these aren't just crimes, they're part of a growing pattern of state-backed cyberattacks. The firm is calling for stronger security standards across the crypto industry. That includes better user protections, more frequent audits, and tighter coordination between companies, regulators, and law enforcement. The message is clear. Crypto crime is evolving fast, and defending against it will take serious global collaboration. Okay, Susie, do you think that's true? That it will take serious global collaboration? I know you're an advocate for taking care of your own stuff.
You knew that was where I was going to go. Yeah.
So, yeah, definitely curious.
Well, it's not Bitcoin's problem, is it? It's smart contracts or poorly written smart contracts, exchanges, platforms. It just highlights exactly like you say the need for self-custody. I feel like you're reading my mind. I've said this too many times now. You're like, oh, it's boring.
I get it. I know what she's going to say. Yeah.
Self-custody, of course. This has got nothing to do with Bitcoin, and these issues with third parties will always exist. I mean, it's not great, is it? People have to start taking personal responsibility.
Yeah. Do you think people are ready for that? You know, say somebody sells their house and they put all of their savings into Bitcoin and they've got, potentially hundreds of thousands of dollars in their Bitcoin wallet that they're taking care of. I mean, that's kind of why banks came about in the first place, because people didn't want to have their gold stuffed under their mattresses, so to speak. So, are we as a society ready for that? I mean, it is a big response, especially when a few thousand, fine, but if it's huge amounts of money, it's pretty terrifying.
There are some really good solutions out there, like multi-sig.
Tell me about it.
What you have your seed phrase, and it's split up into different locations, and you have to have 2 of 3 to be able to retrieve it. So it's not like you've just got a seed phrase sitting in your drawer in your house, and it's a risk. There are lots of good solutions out there if you wanted to look into it, but that's the problem, isn't it? It requires research and people educating themselves, and for too long they've outsourced their thinking to third parties. It's so much easier to allow somebody to keep your money or your assets safe without actually having to take personal responsibility. I think until people start to understand that they have to go down the personal responsibility route, then we're probably going to still have these issues.
And what will it take for people to understand, what is that shift the sort of collapse of fiat? Like, what would be that shift where they have to understand?
Well, yeah, the collapse of fiat, and that happens at different stages all around the world. So the reason why people don't really understand Bitcoin in the UK and possibly in the Western world is because they just haven't felt enough pain yet. But if you live somewhere like Venezuela or Argentina or Zimbabwe or Lebanon, you've felt enough pain to understand why it's important. So you will take personal responsibility, and you often find that people in these countries are way more responsible because they understand how broken the system is.
Yeah. When I was speaking with Freddie last Friday, he was saying about what turned him onto Bitcoin was a financial crash of Greece, and just the banks were just seizing money from people's account, which to me is like, what?
Yeah.
How is that absolutely possible? And I'm realizing, the control these banks and governments have, and I'm starting to see that now.
Well,
So,
your money isn't yours.
Right.
It's not in your bank. And that what you're describing is, you have bailouts. It's like a bail-in. And I really don't think people understand what could come, because you and I have lived through a period of relative stability, so we think that everything's working as it should. I mean, you don't really see that actually it could go very wrong very quickly.
Yeah. So say we're in a world where everyone has self custody of their money. We don't have banks anymore. Do you kind of foresee there being any issues with that?
I'm sure there would be, and
Yeah.
I'm not saying that that's the ideal solution. Like we discussed yesterday about the base layer being decentralized and them having to build solutions on top. And all of these solutions will be centralized in some way or not, on a spectrum from centralized to decentralized, and you'll have to decide on the trade-offs. So I think that we'll get to a stage where people have a lot more control, but then they decide what they want to relinquish based on said trade-offs.
That makes sense. And would you, and this is just your opinion, would you say like all in on Bitcoin, or do you still see the value in having bank accounts? Any value?
Well, at the moment, we have to interact with the financial system.
Right. Things aren't ready for it to be all in just
No.
yet. Yeah.
It would be wonderful if we could all live on a Bitcoin standard, but at the moment, I don't think it's practical. Some people do it, and I really do admire those people. It's quite incredible, and I would love to be able to do that, but we do have to interact with the financial system. So at the moment, it's a little bit tricky, and it's an evolution, and Bitcoin is a 16-year-old asset. So, it's still a baby. We are still early, and time will iron out these kinks.
What do you think about people who haven't bought in yet? Is it too late?
No,
Okay.
absolutely not. I mean, they have to do their own research. I don't ever really want to ask someone to go and buy Bitcoin. I would always ask them to understand it. Because the reason why it's important to understand it is because it's possible that you can have these 80% drawdowns. And when that happens, the last thing you want to do is panic, buy at the top and sell at the bottom, because that's how people lose money. And that's another, like talking about these issues are not Bitcoin. When people lose money on Bitcoin, it's not Bitcoin's fault. It's because they've bought high and sold low. They didn't understand the asset that they were holding, and they didn't hold on to it.
Yeah. Okay, cool. I like it. Moving on to our next story. Hong Kong is moving ahead with a major push to become a global centre for digital assets. On Thursday, the government released its second major policy statement on crypto and tokenization, outlining new plans to regulate the industry while encouraging innovation. The new framework will cover digital asset service providers, crypto exchanges, stablecoins, and custodians. The Securities and Futures Commission will oversee the rules, and public consultations on licensing are expected to begin soon. This builds on earlier efforts that started in 2022, when Hong Kong declared it was open to working with the crypto industry. Since then, it has granted licenses to 4 crypto exchanges and passed a law allowing it to license stablecoin issuers starting August 1st. The government also plans to explore the legal and technical rules around tokenization. That's the process of turning real-world assets like bonds or stocks into digital tokens on a blockchain. The Financial Services and the Treasury Bureau, along with the Hong Kong Monetary Authority, will lead that review. They'll be looking at how tokenized bonds are issued and traded and what new use cases could emerge from this technology. Tokenization is growing fast. According to the new report, the total value of tokenized real-world assets has jumped 380% in just 3 years, reaching $24 billion in 2025. Hong Kong says it will regularize the issuing of tokenized government bonds and incentivize private sector tokenization. Well, this is a mouthful. By making stamp duty rules clearer for tokenized exchange-traded funds or ETFs. The government also supports secondary market trading for those ETFs on licensed platforms, giving investors more access and liquidity. This move comes as countries around the world, including the UK, US, South Korea, and Pakistan, are stepping up their own efforts to regulate crypto. The European Union's MiCA rules, aimed at providing clear industry standards, officially took effect last year. Hong Kong's message is clear. It wants to lead in this space with strong rules, open dialogue, and support for future growth. Okay, I said a lot of big words there, Susie. Could you break down this, like the tokenization and your thoughts on tokenization? And like, do you think that it's good that they're kind of regulating the regulations that they're talking about doing in Hong Kong? It's kind of a couple of questions there.
I'm not convinced by tokenization.
Okay.
I think it sounds great and futuristic and flashy and
It
new.
does, yeah.
Yeah, but it's just, in my opinion, rehashing old systems and just building it on a blockchain. And blockchain isn't really the technology or isn't the revolution that people think it is. Blockchain's been around for a long time, like decades. The revolution, I hate to keep bringing it back to Bitcoin, but the revolution is Bitcoin because it's the proof of work, it's finite supply. That is the real, that's the real innovation in this space, not blockchain. Blockchain is a clunky old tech. So I would say that it sounds good. I get what they're trying to do, but really, is it just an old hash of old systems just with some flashy names? I'm not convinced.
Okay, fair. I wanted to get your thoughts on, everybody's trying to be the country that leads the way in Bitcoin and crypto. Is there a country that what country do you think is really leading the way, that has made the most gains? And like, what are those things that they've done that you're like, yes, I think they're doing it right?
At one point, when El Salvador made Bitcoin legal tender, it now isn't.
It's not. I didn't know that.
Yeah, the IMF put in some rules, and I think it changed, and they had to change it.
Interesting.
I don't think it really made that much difference in reality to what's actually happening on the ground.
Okay.
I don't actually know what the tangible difference to that change was. But I quite liked that as a little test because it was a small country. It needed to do something bold and positive, and I think they started off by buying 1 Bitcoin a day, or they're still buying 1 Bitcoin a day. And Bukele won, I think it was 87%. It was like a complete landslide victory that had never been seen before. So the people seemed to be happy. It was bold. It was new. It's clearly the future. But when you look on the ground in El Salvador, the reality and how it's being used, I don't think it really lines up with the hype that's around it. So I probably would have said them maybe a year or so ago. Now I'm not so sure.
What would you like to see on the ground to be like, yes, they're doing it right?
More circular economies, more use of it.
Do you think that a lot of people are just sort of holding it for investment?
No, I think they're just using dollars. Yeah, so it isn't the economies don't seem to be there like perhaps we've been led to believe. But it's difficult to know, isn't it? The reality.
Yeah, agreed.
Versus, But with regards to the countries that are actually doing well, I mean, the UAE are doing really well. They seem to be forging ahead. They understand it. I think a lot of countries are mining Bitcoin, but maybe keeping it quiet. So it's difficult to know who's doing well. Singapore's definitely doing quite well in terms of, I mean, the US they announced a Bitcoin strategic reserve. That's huge.
Yep, yep.
The UK is not doing very well.
No, I'd have to agree. Yep.
So, yeah, it's really difficult to know because I don't think we actually know all the information or have a complete picture, because I think at the moment a lot of things are being kept quiet.
Yeah.
Because this is global. Once everybody wakes up to what's happening, game theory is just going to kick off and it's going to be wild.
Anton, our producer in the cloud, we actually pushed a story, I think, to next week with Bhutan, which is this like...
Oh, they're mining a lot.
Yeah. Who would have thought? I think that's kind of probably, it's obviously public knowledge now, but yeah, to your point of all of this stuff is probably going on and all these countries are probably doing these things and we don't have the full picture yet.
Yep. They've been quite open about it, but you know, yesterday we talked about the drop in hash rate suddenly because of the
Iran.
bombings in Iran. Yeah, and then that hash rate dropped by 15% when they bombed it. I don't think anyone was really aware of the mining that was going on there, and we still don't 100% know if it was connected or not. Very strong correlation. But things like that are going on all the time. I mean, with Russia, I would be shocked if they weren't mining Bitcoin, especially with all the sanctions that they've put on.
Oh yeah, I bet everything is.
If you're on the receiving end of the weaponization of money, your go-to should absolutely be an uncensorable, decentralized, global, borderless, peer-to-peer cash.
Which I'm sure they're utilizing.
100%. They've got to be.
Absolutely. All right, we're going to take a quick break and we will be back with more Global Gist stories. See you soon.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to our Global Gist segment with the latest Bitcoin and tech stories from around the world. Next up, a new $100 million investment from the United Arab Emirates is drawing attention to a crypto company backed by US President Donald Trump and his family. World Liberty Financial, or WLFI, announced the deal on Thursday. The buyer is Aqua One Foundation, a UAE-based group that describes itself as a Web3 native fund. The investment makes Aqua One one of WLFI's biggest token holders, even larger than crypto billionaire and Tron founder Justin Sun, who invested $30 million last year. In a joint statement, the company said the funds will help build a blockchain-powered financial system. That includes tokenizing real-world assets, which means turning things like real estate or bonds into digital tokens, and integrating stablecoins, which are digital currencies designed to hold a steady value. Aqua One's founding partner, David Lee, said the goal is to bridge traditional finance with blockchain technology. He called WLFI's ecosystem a trillion-dollar opportunity to reshape how global finance operates. But this investment comes as scrutiny around WLFI grows. The company was co-founded by President Trump's three sons, and in June, Trump himself disclosed earning nearly $60 million from WLFI. He also personally holds more than 15 billion of the project's governance tokens. Earlier this year, Trump's son Eric announced that Abu Dhabi-based firm MGX would use WLFI's USD1 stablecoin to settle a $2 billion investment on crypto exchange Binance. That sparked concern on Capitol Hill. Lawmakers are currently considering new rules for stablecoins, and some Democrats say the president's involvement could create a conflict of interest. During a Senate hearing on Wednesday, U.S. Attorney General Pam Bondi declined to comment directly on the issue. But Oregon Senator Jeff Merkley urged her to take it seriously, calling foreign influence through crypto a national concern. Several proposals are now on the table, including new rules to stop sitting presidents from holding digital assets while in office. For now, WLFI says it will continue to grow its platform, even as questions around regulation and oversight remain. Susie, what's your take on this? I saw your head shaking throughout that. What prompted that? What are your thoughts?
I mean, it's a huge red flag.
Yes.
He's holding billions in his own token.
Yeah. Yeah,
It's definitely a conflict of interest.
I would have to agree.
I don't know who's advising him or why he's doing it, but you can't issue a token to the public and then try to legislate to protect the public at the same time. It feels very
Confusing.
off.
Yeah.
Just huge red flag. I don't know what else.
What more
to
can I
say.
say? Yeah.
Pretty awful stuff. I mean, the whole point with Bitcoin is it's transparent, and we say don't trust, verify. This isn't verifiable. It's printing a token, issuing money, and then conning people. I mean, crypto hurts people. This is a VC company. This isn't. It's run by somebody. It feels slightly dishonest, but I'm not entirely sure. I want to say he knows not what he does.
Okay, well, that's very nice of you. Yeah, we keep seeing this story come up a lot, and obviously massive red flags. And the question I have is, how is this how is this allowed to pass? You know, I think if it was Biden doing it, could you imagine? I don't think it wouldn't fly, or Obama. I don't think that would fly for a second.
I don't know. They probably got away with their fair share of
Perhaps.
stuff. I don't think that they were squeaky clean or whiter than white. I just think that he's now into crypto. It's really new. He's probably being advised badly. And like most people, when they're new into the space, they don't see the dangers or the harm. Maybe that's where he's at.
Well, I think that the goal is probably to make money. And so I think this is a great way for him to make money. I'm not sure that it's about protecting those that are buying into it. It's a great money-making scheme.
Yes, it is. It really is. And it's a huge conflict. You would think that it would be illegal in some way. I'm surprised it's not.
Yeah, we actually were trying to look it up on the show a couple of days ago to find, like, is this allowed? And couldn't pull up anything quick enough. But yeah, I mean, they were talking about passing new bills to stop sitting presidents taking advantage of this type of situation. So if there's a new bill being proposed to stop that, it makes you think, oh, perhaps there isn't. But yeah, I thought that, self-dealing and conflicts of interest and things like that weren't allowed. But I mean, it's doing a lot of things like this. So yeah.
It doesn't make sense to me.
No.
I can't work it out.
Same.
Yeah.
Agreed. All right, let's move on to our next story. Taking a little bit of a pivot now. The UK government has confirmed a major climb down on its planned welfare reforms, following pressure from over 100 PMs in its own party. Work and Pensions Secretary Liz Kendall announced that people currently receiving disability benefits will not see their payments cut. That includes those on Personal Independence Payments, or PIP, and those receiving the health component of universal credit. Instead, the proposed cuts will only apply to new claimants in the future. The decision comes after a growing rebellion among backbenchers. Without a compromise, the government faced a likely defeat in Parliament. A spokesperson for Number 10 said the government had listened to MPs who support reform but were concerned about the speed of the changes. The new plan, they said, will protect vulnerable people while making the system more sustainable. The government had hoped to save £5 billion a year by 2030. Without changes, the cost of working-age health-related benefits could rise by £30 billion by 2029. In addition to scaling back the cuts, ministers will also fast-track a £1 billion support package that was originally planned for 2029. Dame Meg Hillier, a key figure in the rebellion, said the changes are a good step forward, and she's pleased disabled people will now be involved in designing the future of the benefit system. Most Labour MPs now appear to back the revised bill, but some remain opposed. Crawley MP Peter Lamb said the reforms still don't go far enough. The bill is due for its second reading on Tuesday. That's the first chance for MPs to vote on it. If it passes, it moves further debate the following week. This is the third U-turn from the government in a month, raising fresh questions about the Prime Minister's authority. And while the revised plan may win over Parliament, critics say it does little to address the deeper issues in the welfare system, or the trust many have lost in the process. They're not doing too well, are they, Labour, at the minute? Yeah. Lots of kind of going back, a lot of sort of very hard and fast plans. I'm not sure the kind of, it seems that a lot of budget related. We're going to slash all of this and then, you know, and then having to go back on it.
They still want to spend money on war
Yeah.
and debt interest
Yeah.
and fiscal mismanagement.
Yeah.
So look, the thing is, what are we at? 100% debt to GDP. I think if you're anything over 77% and you're in a debt spiral, we're kind of screwed anyway. The only way out of this is to debase the currency. We know that. That will probably end up happening. But they'll pretend that it's not by design, and it has to be. That's the only way that you can get out of this horrifically heavy debt-based system that we've got. Making cuts like this, it's small fry. It isn't going to make any difference. I completely understand that if you're going to run a successful business, home, government, then of course you have to balance the books. But we're past that point now. I honestly don't see that hurting people like this is really going to have a tangible difference on our finances. And this is happening because money is broken. If money wasn't broken, I don't think we'd be seeing these issues in the same way that we are now.
Yeah. When you talked about debasing the currency, can you talk me through what would happen there?
So
The only way to kind of is that the only way of breaking the debt spiral?
Yes, absolutely. We're never going to pay it off, and we're absolutely in a debt spiral. So for example, going back to your point that you were making about mortgages, inflation kind of erodes that debt. If you think of it in terms of that, so if you bought a house for £100,000 and you had a mortgage for £100,000, over 20 years with inflation, that £100 when you bought it would feel a lot less than it would have been if you'd bought it 20 years later, because inflation kind of erodes that debt. And it's exactly the same thing. If you suddenly go to a 50% inflation, then all of your debt suddenly becomes a lot cheaper. So it happens often, and it's cyclical, and you know, this isn't new. It happens all the time when governments need to get themselves out of a situation, and it really is the only fix that they probably have available to them. But they won't tell you that.
What is the practical steps of what is debasing the currency? What does that mean?
So what kind of is happening at the moment is we have a set amount of debt, and we have to pay interest on that debt, and we have a lot of obligations that we have to pay. So they essentially just print money to cover it. And so the more money that they put into the system, the more money that's available. I'm trying to explain it in really simple terms without the more money that's available, the less value your money has, which goes back to our point that your house hasn't gone up in value, the value of your money has gone down. So the more money in the system means that the pound in your pocket becomes worth less. So that they do it. It's as old as time.
But what is debasing? What is the solution?
What's the solution to debasing?
Yeah. Debasing is okay.
Debasing is the solution to the debt issue, the debt problem that we've got. We can't pay it back, so you just have to make that debt more worthless.
Interesting. And that's what they're doing?
Well, they're not saying that they're doing that, but when you have a high bout of inflation, that's ultimately what happens. And they cause the inflation, say that they don't, but the way that they get over the way that they try and reduce inflation is they rise interest rates, crush demand, and then make it much harder for people to afford things. So they stop spending, inflation comes, I'm oversimplifying it, inflation comes down. So our economy is based on creating as much misery as possible, so people can't buy anything. So the cost of things reduce, and then they can start lowering interest rates again. But really, it's just Keynesian economics, and it's something that gets taught in university, and it clearly doesn't work for people.
Right. The average person. Thank you for explaining. Okay, going on to our last story of the day. This will be our Buck the System story. So, Kraken, one of the world's biggest crypto exchanges, has launched a new payments app called Kraken. Great name. The app lets users send and receive money, both crypto and traditional currencies, across more than 100 countries. It's a major step beyond Kraken's usual business of digital asset trading, and it puts the company in direct competition with big names like PayPal, Venmo, and Cash App. With Kraken, users get a dedicated spend account. They can move money instantly in over 300 different assets. That includes cryptocurrencies and local currencies. Crypto transfers will use blockchain, the same technology that powers Bitcoin and other digital assets. But for traditional money, Kraken will handle the transfers internally. That means no need for outside banks to process the payments. Kraken's co-CEO, Arjun Sethi, said the app builds on the company's existing systems for moving money globally. He explained that Kraken already has money transmitter licenses in place. So expanding into peer-to-peer payments was a natural next step. The company says it's responding to what its customers have been asking for, more ways to use their money, not just trade with it. This move also comes just weeks after Kraken announced plans to offer X stocks tokens that represent US equities in certain markets outside the US. It's another sign the company is broadening its reach far beyond crypto trading. Looking ahead, Kraken plans to expand Kraken even further. Just can't get over that name. The company says it's working on physical and virtual cards, as well as services like pay in advanced options and loans. The launch of Kraken reflects a wider trend across, I can't stop laughing, crypto industry. Exchanges are no longer just focused on trading. Many are now working to become full-scale financial platforms. All right, I'm going to come straight to you just to get your thoughts on this, Susie, just as we final take on that. Is this a good thing or a bad thing for Bitcoin?
I don't know.
Not sure.
Yeah, like you, I can't stop laughing at the name. Like, what do you think of? Like,
It's
what is
catchy, yeah. It's real addictive.
I'm really not sure. I haven't done
Fair.
enough research into it, and I wouldn't want to comment.
Fair enough. We'll have to look into Kraken. All right, that brings us to the end of our show today. Stay tuned. Next up, we've got The Great Awakening with Nolan. We'll be back next week for more of the Roxom Report, coming live every day at 1 p.m. Have a great weekend, and we'll see you soon. Bye.